The Digital Banking Podcast is powered by Tyfone. Tyfone is a dramatically better digital banking provider. Our appeal is unique. We collaborate closely with our customers and the banking ecosystem in an open approach coupled with a powerful user experience that helps get things done. On our podcast, you will hear how digital banking plays a leading role for community-minded financial institutions from the unique perspectives of our industry expert guests.
All right, welcome to another episode of the Digital Banking Podcast. I'm your host, Josh Tatar. Today, I am super excited to have Austin Wentzlaff, the president of FinTech Accelerator, on the show. Austin, what's up? Thanks for joining me.
Thanks for having me. I'm excited. Not really sure what I got myself into here, but I'm looking forward to whatever it is.
You're going to find out now. No, it's awesome, man. We appreciate having you on. But before we jump in, to give our audience some background on you, can you tell us a little bit about just your past experience and what a day in the life of you looks like?
Yeah, well, I'll take you back to a nice spring day of March 13th of 1992. Not kidding. So yeah,
I really want to know what happened on March 13th, 1992.
I was brought into this world.
Oh, there we go.
Yeah. If you're wondering when my birthday is and you want to get me something, Josh, there you go.
Okay, note to self.
But no, it's for the last, I guess it's been 7 years or 8 years now. I lose track of it. I've been in the credit union space and I stumbled upon it. I think that's the story of a few people that I know in the credit union space. I had no idea what a credit union was, to be honest, when I first joined On Approach, where I spent most of my early career. And I found out about it just researching and looking around. And then I stumbled upon it and fell in love with it. And that's where I've been ever since. So I spent 7 years in, like I said, in On Approach, helping credit unions better analyze their data. That company was acquired by Trellance, and I really enjoy startups. So I decided that I was going to go find the next startup. So that's where I've been ever since. Just looking around the industry, seeing what's new, which obviously is a never-changing question. What's new? So trying to stay ahead of that and find new ways to use my time.
Yeah, it's one of the things that's so fun about this industry. It's so funny. The last podcast that we did was with Natasha from CU Times. And she said the same thing. I stumbled into this and then you just don't really stumble out. I don't know. Somehow you brought into the credit union fold and then you don't ever want to leave.
Yeah, it's funny. I tell everybody this, that like when I first got my first job at On Approach, I was still in high school or in college, and I was in a money and banking class at the time. So I was like, oh, perfect. I'm going to learn everything I can about credit unions. And then first day on the job, I'm going to know everything. And it's like a 300-page document or 200-page textbook. I opened it up to the index to find credit union page, opened it to that page. There was literally like 2 sentences, like not-for-profit financial institutions, blah. That was about it. I was like, all right, I guess I know what I need to know about credit unions now. I don't know.
That's funny. So what are you doing today?
Yeah, so today, like I said, I really love the startup world and finding new companies, helping companies grow from the earliest stages of growth is really where my passion lies. So when COVID hit, I decided that I really wanted to spend a lot of time and energy finding solutions that benefit the industry. Because, you and I have talked about this in the past, Josh. People don't want to be sold to in the pandemic necessarily. It's a tough spot to be in. So I really wanted to find solutions that really we're going to excel in the COVID era and post-COVID, obviously, too. So I spent the better part of 3 or 4 months researching different companies, creating a different list of who I wanted to start talking to. I started talking to some CEOs and different executives of different companies. And then I landed on kind of narrowing my list down to 2. And that was the kickoff point for starting my own company. So I started FinTech Accelerator, LLC. But really just as a shell to contract with these different companies. So I'm working with 2 different companies right now. One's called Luma Labs, and just helping them crack into the credit union space and expand throughout.
Yeah. So maybe take just a second and give us the elevator speech plug for both of those guys that you're working with.
Sure. Yeah. So I'll start with Luma Labs. Luma Labs offers passive voice authentication within the call centers. So imagine you call into your credit union, Josh, and you say, hey, this is Josh. I'm looking to transfer some money to my wife's account, or I'm looking at taking a HELOC out against my house. What are my options? As you're talking, the Luma Labs system, which is called Luma Shield, is looking for your voice biometrics and pairing those up with previous conversations you've had with the credit union to sync it up and basically say, yes, this is Josh. We're verifying him based off his voice. So I like to use the analogy like clear. When you go to an airport, you use your fingerprints, you use your retinas. They're using past data that you gave to them when you signed up to use that as a way to authenticate you. So it eliminates the process of you calling in saying, hey, this is Josh. And then I go, oh, great. Josh, do you mind if I ask you a few questions? And then we get into your mom's maiden name and your street address and the last 4 digits of your social and whatever else they need in order to authenticate you. Instead, it's just purely off your voice.
You mean the things that Equifax lost when they got hacked?
It's like one of those things, like knowledge is power, but it's also very scary. I've been learning as I've joined Illuma Labs, learning about some of the scary stuff that fraudsters can do. And don't quote me on the stat, but I think the stat is that fraudsters have a 60% likelihood of getting all of your security questions because they can buy them somewhere on the dark web, or they can go to social media and look at things that you already put out there. What's your favorite pet's name? Well, you have 10 pictures of you and Scruffy hanging out and saying, I love Scruffy, so it's not that hard for them to be able to figure out what those questions are, but it's very hard to replicate your voice. Everybody has a very unique voice, how they talk, all that stuff.
It's a good point for a little public service announcement. Those little surveys that float around on Facebook where they ask you all these different things so that they can tell you what gemstone you are or what car you should drive or types of things. Those are just wonderful data mining fields for fraudsters. So please don't fill those out. I know they sound fun, but please don't fill them out. You're just giving away a ton of information. I'm in a Facebook group for just this engineering group that does different things. And somebody posted a meme the other day that was like, hey, just for fun, I'd love to do this survey with everyone. What's your primary financial institution? And what's its routing number? And what's your account digits? And what is your mother's maiden name? And I was like, seriously, no, this is what all those things are asking. So just please don't. And that was the point. Yeah, I think we really need to look at different ways to authenticate people because some of these traditional models, the fraudsters are already a step ahead.
Yeah. And I mean, part of it too is like fraud is almost one of the things that we talk about last when we're talking to credit unions. And it's definitely a feature of the voice authentication. It's something that's extremely important. But operational efficiency and the user experience as well. I think that's the one that we hit on the most is you've been on the opposite end of that phone call many times in your life of being asked way too many questions, getting bothered and getting annoyed. And that's what we're trying to eliminate. We want the credit union experience to be something special where when I call into my credit union, it takes you back to the old days of the mom and pop banking experience where hey, Josh, how's your family? That type of thing. And less about give me all of your security questions, give me your different things to authenticate you. It's more of a personal touch feel.
Yeah, I think that's such an important point that we've been talking about a lot lately because as the world goes more digital and as hopefully for a short time period, COVID has caused us to even go less in person and less personal interactions. When we look at the credit union space, that's such a big differentiator, right? My little credit union knows exactly who I am. And to that point, like when I go in, Sue says, hey, Josh, how are you? Like, how's Erica? Not what Bank of America does, which is please go stand in line number 126843. Please have your identification ready. And it's a very different feel. But when we're all digital, how do you retain that mom and pop shop feel? And I think that's one of the areas that technology really needs to step up and focus on giving credit unions back that differentiator in digital.
Yeah, definitely.
All right. So you have 2 that you're working with, right? So what's the second one?
Yeah. So the second one's called Renify, which is a renovation lending solution. So we allow the borrower to take money out against their after renovation value. So instead of looking at what your home is valued at today, we know that because you're doing a renovation, you're increasing the value of your home. You're doing a new kitchen, you're putting on a deck, putting a new patio in, whatever it might be. Those are all adding to the resale value or the existing value of your home. So it allows the borrower, the homeowner, to do a lot of the renovations that they might not be able to do with traditional financing. Not going to get out as much money with a traditional HELOC as you would with a renovation or a Renify loan. So maybe with traditional financing, you're maybe only going to do just the kitchen but really you have a big, long wish list of things that you're trying to accomplish. And wouldn't you want those done now versus having to wait 2 years, 3 years, 5 years until you build the equity up in your house or until you build up that cash pile? It's pretty cool because, a lot of the homeowners, especially now, are within a couple years of buying that house. Even if you put 20% down at the time, you probably haven't built up a ton of additional equity in those first 2, 3, 4, 5 years, just based off how loans are structured. So this really gives them the opportunity to take the money and do what they want with it in terms of improving their house.
I only say this because I'm looking behind you, and I'm going to probably credit your wife on this one, if we're being honest. I don't know. Maybe it's you, but I know you're a big home geek and you're big on the investment properties and putting work into houses. So I know this is something that you're pretty personally passionate about too, right?
Yeah, definitely. And I would give credit to my wife for this behind me. So it's that window, that fake window, or it's not fake, it's a real window from an old farmhouse or whatever it is actually from my grandparents. So my grandpa is one of those people that has like 3 sheds just full of stuff or crap, if you will. So we go to his place all the time and there's just new cool things. And this window is one of those things that came from it. But I wouldn't have thought to put a window that doesn't go up to the outside in your house. So we'll definitely credit my wife with this.
So for those of you that are obviously listening and can't see, Austin has this really cool, like refurbished window just hanging as a picture frame on the back wall behind him. So that's But anyway, so I know that this is something that you and I have talked about even pre-COVID era. It's funny how we use those. I feel like terminology now. It's like PC, and hopefully there's going to be a BC or an AC right after COVID. Yeah. But this is something that you've been playing in the space for a while, right?
Yeah, I bought my first house in 2015, I think. And I've just been on a spree of buying and selling different houses ever since then. I think I've gone through 10 or 11 different real estate transactions, whether that's on the buy side or the sell side since then. So yeah, definitely deeply passionate about it. I love buying investment properties, but also the renovation aspect of it is really interesting to me because not a lot of people have this. It's kind of like Chip and Joanna Gaines, that type of thing where like they walk into a house and it's just, and they're like, yeah, we can make this awesome. Check it out. Like, here's what I would do. I'd blow out that wall and then I would whatever. I like to think that I have that eye too, where I can go into a really gross looking house or just a really outdated house and be like, okay, we can make this awesome. Like it's got
make this work.
Yeah, it's got the bones. It's got everything it needs. It's just ugly. It needs some paint. It needs a few things here and there. So yeah, not just investment properties and investing in real estate, but more so on the turning something ugly into something pretty cool that people actually want versus are like girls,
Yeah, it's an interesting concept right now, especially, right? And it's interesting you bring that up. My brother-in-law and his wife are looking for a house and they're really having a hard time finding what they're looking for. The market is just not there, at least here in Portland, Oregon, for tons of houses on the market. There's more people looking than there are houses. And one of the things that they keep finding themselves going back to is that idea, right? Okay, well, we can't seem to find a new house that meets what we want. We can't seem to find an old house that is in the shape that we want it to be or set up the way we would want it to be. And then this dilemma of, do we buy a fixer upper and what does that look like? So how does the credit union space have an opportunity to help people in that time?
That's definitely a problem. It's not just in the Portland area. That's pretty much across the entire nation right now of record low inventory. You also have people fleeing the city for a variety of different reasons, going to the suburbs. Part of that just aging, like natural age. The millennial generation is getting to a point where it's having kids, getting a dog, they want a yard, they're going to get out of the city. Part of it's political unrest, part of it's COVID. So there's all of that stuff that's building up to this flee to the suburbs or the more rural areas where the housing supply just doesn't exist. So with your brother, was it your brother-in-law? I forget. Sorry.
It's my wife's little sister. So my brother-in-law and his wife.
Yeah. So like in their situation, the way that a credit union could benefit them is they could first get the loan through the credit union and then go back and get a Renify. It's basically like a HELOC on steroids. So they would be able to take that HELOC out and do all of the renovations they want. Whereas traditional financing right now, you can't go and buy a house and say, hey, mortgage provider, I want to do $100,000 worth of stuff to this house. So give me the loan at that $100,000 plus level. They just won't do it. They do it at what the appraisal value is, and they don't go above that. Maybe a little bit, $5,000 or whatever, but that's about it. So in this case, they would be able to actually borrow at the after renovation value. So they could do all of those things immediately versus having to wait. The big reason why people don't do fixer upper houses is because they don't want to sit and live in a fixer upper for 2 years. And believe me, I've been through it. My wife and I, our first house that we bought was a foreclosure. It was definitely one of those like equity opportunities. Yeah, it's an ugly house. It needs work. But it's just one of those things where like we ended up moving from that house because we moved to Florida, and that's a whole different story. But we decided to fix it up and do that whole thing. We did that for about 2 years, and our basement was my work zone. Our garage was my work. I was spending all of this time and energy just like fixing up the house. And then we didn't really get to enjoy it because we took 2 years renovating it, and then we sold it in 2.5 years. Yeah. So I think being able to get access to all the capital that you need in order to build that house the way, or make that house the way you want it to be right away, is amazing. But nothing really allows you to do that today. No, there's nothing out there that does it. So like for credit unions, especially, I think this is a tremendous opportunity to set them apart, because Renify is focused on the credit union industry exclusively right now. So we're going after and partnering with credit unions. And it's one of those things where you can't get this anywhere else. You're either a credit union member and you can get a Renify loan, or you're out of luck. And that can really set apart the industry, because, you know, people might get mad at me for saying this, but the industry is highly commoditized. Like everybody offers a HELOC, everybody offers a CD, everybody offers a mortgage, but not a lot of people are offering this after renovation value type of product. So it's very different. And credit unions can be the ones that help those members get through the tough time like your brother-in-law is having right now. And that creates a member for life. They're going to be like super appreciative that I couldn't do this anywhere else besides with you guys.
That's pretty cool. Yeah, I dig that, because we talk about how the credit union industry also just looks at loans in general different than the big box banks. I know to Chase and B of A that I'm a number, but to my credit union, they know my history. I'm a close to 20-year member there. They know that my credit score may be this, but they also know that they're the ones that personally helped me get it to the way that it is. So they know that I've been built on a foundation of understanding how to manage my finances that they personally gave to me. So they're probably a little bit more willing to do things like this refinance loan versus somebody not in that credit union industry that doesn't have that high touch connection to the member, right?
Yeah, definitely. I'm actually going through a process right now that's been extremely painful. So I think I was telling you earlier that I switched from being a W-2 employee recently to being 1099. So I'm now self-employed, technically, is how the financial world looks at me. As a result, no one wants to give me a loan, because you can't use your prior W-2 income as reference to what you've earned in the past, because you're no longer that. So I had a really hard time. Finally, I found an institution that would do it, but it's community institutions. It wasn't the big banks. It wasn't when you were talking about selling it to Fannie and Freddie. It had to be someone that actually wanted to listen to my story and say, like, here's who I am. Here's why it's a smart decision, bank or credit union, to do this. And they finally were like, yeah, it makes sense. We'll do it.
Yeah.
You know, so that's crazy.
No, that's something that hits really home for me too. My dad's been self-employed for the last almost 40 years. And same thing. I mean, even after 30 plus years of that, it was still an absolute nightmare for him to get financing for his house. And anytime he wants to take out a loan for something, it's difficult to show that he's a stable, reasonable investment to give a loan to. And I introduced him to my credit union about 10 years ago. And it's totally changed things for him. Now, from it being an incredibly painful process that he was scared to do and probably didn't do things because of, now he knows he actually has a voice and an opportunity to be listened to, and an opportunity, that capital, to better his life. It's pretty cool stuff, man.
Yeah, and he's going to be a member for life. If you can bring that personal touch, it's invaluable, because banking has gotten so far away from the actual person. It's more about your income. It's the numbers. It's less about, hey, Josh, I like what you're doing. That's what this institution said to me. Those were their exact words. We looked into what you're doing and we like it. Let's do this. I was like, that's so
cool.
Yeah, it wasn't about like debt to income. It wasn't about LTV. It wasn't about any of this other stuff. Obviously, that's important to them. They still looked into that stuff, but it was more about, hey, personally speaking, we like what you're doing and we'd want to do business with you.
You know, I think it's one of the reasons why, even though I work in the digital space and I'm a tech junkie, I still really and truly believe that there is a huge importance for physical branches and for real people being behind some of the decision-making process and everything. You look at, it's probably a little bit of a controversial subject. AI is one of our buzzwords in this industry right now. Like, it's everywhere I go. Everybody wants to talk about AI. How's AI helping me? And I think there's a lot of benefit to what you made earlier about helping with operational efficiencies so that the credit union can then focus on those more high touch interactions where it really is more about the human element. Because the AI can do a great job of looking at all of my past history and looking at all the things that are fairly black and white on my record and say, we're going to take into account Josh's credit score. We're going to take into account the different loans that he's had at this institution and his payment history and things like that. We're going to come up with our recommendation for should he be given this loan, yes or no. But sometimes I think people still fall through the cracks without that conversation. The AI is not going to sit there and be like, all right, Austin, so what's this whole FinTech Accelerator thing that you're doing? Why do you think this is going to be successful? Oh, you're like super passionate about the credit union industry. You're hyper connected in this industry. Oh, you have a really good opportunity of success here. Oh, we're willing to take a chance on that because that's who we are. I don't think the machine's going to do that. It's going to be like, sorry, bub.
Yeah, no, I think you made a great point about like how operational efficiency gives you the opportunity to serve that member. Because we actually just got off the phone when I was talking with Illuma Labs to a credit union, and the guy that we were talking to at the credit union brought up the point. He goes, so you telling me that I now can have 2 extra minutes with this person to serve them better? Using the word cross-sell, but essentially what we're talking about is providing them with something that they might need. Because with the authentication piece, that 2 minutes is usually spent asking you questions. Tell me your date of birth, tell me your address. But now we can take that from 2 minutes down to sub 15 seconds. That difference there in time allows you to now learn more about them, ask them how their day is going, spend some extra time just getting to know them, and then serve them better. So I think there's definitely a place for all the technology, the AI piece of it, but use that not to just keep crunching everything down. Use it to have the same staff. Because I think a lot of people talk about like reduction in staff as a means of how to save money with AI and stuff like that. I think it's less about that and more about how do you use the same staff that you have or even grow your staff, but use the extra time to do what you do better versus just eliminating people and just replacing them all with robot Josh.
That is definitely what the world does not need.
Yeah.
Man, you just hit on such a personal hot topic for me. And I don't know why. It's just, I think this has really come to the surface this year for me, how incredibly important that topic is. I love what you said about, okay, if we spend 2 minutes asking questions, okay, Austin, please tell me your mother's maiden name and the last 4 of your social, and I need to verify that, versus, hey, Austin, how's your day? What's the weather like there in Minneapolis? Oh, it's frigid cold. Oh, I'm glad I'm not there. That's a very different conversation. And it starts the conversation on a very different tone. So it opens up the opportunity to have a very different conversation after that first 2 minutes.
Yeah, it makes it less transactional. Like it's not just call me to do something, I'm going to do it and we're going to leave. It's more about service and actually serving them instead of just getting that transaction, then getting them off the phone and getting to the next call. You can actually learn about them. You can make them feel better. I enjoy when people ask me how I'm doing. And it's usually a short conversation, but I appreciate it. Like, I'm not going to go on and tell them my life story because they asked me about it, but I am going to.
Back in 1992.
Yeah, we'll go back to that same day. But yeah, I appreciate it. And it's one of those things that I think about when I have an institution that does that. I'm like, that was cool. They asked me how my day was going. They asked me about me. Versus just, yeah, we can do this transaction for you, get off the phone. I got to answer another phone. And you definitely have institutions like that. I can name one right now that I was just on the phone with yesterday. I'm not going to name them, but it was one of those things. We need to get you off the phone. Like, I have too many questions and they weren't having it.
It's such a different conversation. And I think That's what is just become such a big hot topic for me, is that what you were talking about is, all right, so we have all these different things that we can put operational efficiencies in place for, and technology is a really big driving force in that. And I could not agree with you more. That doesn't mean we should reduce the number of physical branches and physical people and things like that. If anything, I would say take that money and reinvest it in more people, because people are the answer. People are the key. They're the secret sauce. They're what you can't replicate. No offense to my own darn team, but in software is replicatable. It is. Yeah. It's just code. So what's not replicatable is people and experiences and compassion and actually being there for them. And so as we bring in technologies that put 2 minutes back in the call center folks' time, instead of using that to rush off the phone, take that time to have the conversation about, hey, Austin, how are you doing? How's your day going? What's happening? What's new? That may uncover a totally different set of things that you may not have ever found out about, because you may have called in just to check a balance because that was the way you wanted to interact with the FI, or you wanted to do some sort of, like you said, transactional type thing. And in the conversation, they're saying, how are you doing? I'm flustered. I'm frustrated. Why? What's going on, Austin? I'm trying to get this done because I'm trying to renovate my house and I'm doing this one project at a time and it's just killing me. That opens up a conversation for, oh my gosh, our credit union can help you there. I'm a big fan of putting people back into communities and being out and about and educating members and looking for ways that we can even better serve our communities in not just the transactional ways.
Yeah. And I think obviously from our time at On Approach, what we were doing there, and that was our messaging too, is that data analytics can make things incredibly more efficient, and it can give you a ton of insight into who that person is. But the next action item there, it has to be a person. You have to use that data to then go, I like what I see about Josh. I've looked into him and I like his story. I'm going to call him. I'm going to find out some more. It looks like this guy could use a HELOC, or it looks like he could use something, but maybe you're a bad example, but maybe they don't fit into the normal confines of someone that we would normally lend to. But I'm looking at the data and I'm looking at something like with good growth trajectory. Let's call them up. Let's find out more about them. And maybe that call leads to nothing. Maybe it's just, we're not going to do that. But maybe it's one of those people where, like your dad, where we find out that successful entrepreneur, he's had some trouble getting traditional financing. Tell us more about you. Let's figure this out. I was just trying to do the math on my calculator as you were talking here. I just got off the phone with the credit union a little bit ago that said they do 8,000 calls a month. So, times that by 12, that is 96,000 calls a year. And if we can save you even 2 minutes, that is 192,000 minutes, or divided by 60, 3,200 hours. That's more than one FTE of time that you can save by using technology. What are you going to do at that time? Are you going to fire the call center person because we don't need them anymore? Or are you going to keep your same operational costs, but now use that to drive further revenue? And I think that goes with what you guys do at Tyfone so well too, because you guys are making banking so much more efficient. The whole omni-channel bank anywhere is incredible, but it does lose a little bit of that personal touch. But how can we use the Tyfone information and see the activity and see who we should be reaching out to, spend the extra time and energy reaching out to them and learning more about them?
Yeah, it's funny as you were talking about your time at On Approach and how credit unions are starting to really get smart about using that tremendous amount of data that they have on hand to then make smarter business decisions, make smarter operational decisions, and look for places that they can find some efficiency. And there's just so much that can be done with that. As soon as you started talking about it, who I'm talking about already, and quick shout out to Andrew and Bert and Ryan and the team at our community, because I think that there's such an incredible shining example of that, where I follow them on all their social media and everything. They're just killing it. And you can tell that it's because they're really smart about some of the things that they're doing. And they have a really good understanding of how to do processes and the transactional type stuff, and then be able to divert a lot of that energy that would have been used there to other places to continue to grow and to continue to impact their community there in Shelton.
Yeah, it's funny because our community is a great example. We first brought them on board at On Approach, it was, I don't want to say experimental. These guys are only 300 million. At the time, they were 300 million. I think they're above 4, approaching 5 now. So great growth there because that's only a few years that I'm talking about here. But it was kind of like credit union of that size implement such a large technology stack, like a data integration platform, and use it effectively. And they're a shining example of, yes, you can. I think they benefited the most from it because they never left or lost the community aspect of it. It wasn't just like a means to grow us from 2 billion to 2.5 billion. It was a means for us to know our members better. And as a result of that, obviously you grow because your members appreciate it. They realize the value in that. So yeah, that's a great example.
I think that's one of the things that I love about the credit union industry so much, right? When you look at the credit union industry, like any other business, right? You have your shareholders, and your shareholders are your internal shareholders, your employees, your customers, and your investor shareholders. And the credit union industry, what's so cool is that for all intents and purposes, all three are the same person. They're your member. Your employees are your members are your shareholders are your members, right? So we're just trying to make the bottom line better. We're trying to get our stock price up. We're trying to exit at a really high valuation. No, we're just trying to bring benefit to our members. That's bringing ROI to our shareholders. And so I think it creates a very interesting dynamic where they get to be really clever about the ways that they implement these types of technology to not just be more efficient, but take that efficiency and do good with it. I don't know. It's pretty cool.
Yeah. The mandate to serve is something I've always found interesting. It's one of those like interesting / frustrating things for me as a person that has sold into these institutions, because I always think the ROI question is obviously important. Like, we need to know how much money we're going to return from this. But the question I always like to ask people, and I don't know how to do this in a non-condescending way, but it's like, what is the ROI of not doing this? And I think of like Tyfone as a good example. Pretty much any tech solution out there, it's the ROI of not serving your members is greater than what this is going to cost in a lot of cases. How do you get them to look at it that way? I've always struggled with that. If you have a good answer for me, I'd love to hear it. But it's one of those intangibles that you can't just put a number to.
Yeah.
And we were actually just talking about this at one of the companies I'm working with. And my thought was like, we're saving time. Time is money. Can't you just equate that member time to money and show like, here's what we did? But it's just, when you get into it, it's so complex.
It's so intangible.
Yeah. I was a finance guy to start. Like, that was what my degree was in. So I always want to try and bring numbers to the table with it. But there really is no way to calculate that ROI. But I think that with a lot of tech platforms, that is the more important ROI. It's not that you're going to input this widget and 10 widgets are going to come out of it. It's, if you didn't input this widget, what's going to happen? Maybe members are going to leave because they have a terrible omni-channel experience. So like, they didn't implement Tyfone as an example, and now they're like, I'm going to leave and go elsewhere. So it's like, is it too expensive? Maybe, but maybe it's not, if you think about it in that regard of not just the number ROI, but also the intangible ROI of the member experience. That's why I was saying I always get frustrated, because like, you have to serve your members. That's the mandate that credit unions have. So go serve them.
Oh man, we've just started a whole nother podcast. I couldn't agree with you more. You should go back and listen to the podcast that we had Amber from Prodigy on, because her and I talked about this a little bit as well. When we were talking about, it's not just the total contract value, because that's the numbers. That's the, oh, this is going to cost me this much a month and I'm signing a 5-year contract. Therefore, this is what this contract is going to cost me. But what needs to be included in that, and man, I just so appreciated Amber's thought on this, because the way I'd been looking at it was, no, it's not just the total contract value. Like, it's the total cost of ownership. It's the total cost of what you said, the intangibles as well. If I don't do this, what ripple effect is this going to have on my member experience and my ability to serve them better? And Amber said, no, it's not even that. It's the total cost of partnership, because it's not even that you should be looking at it from, I'm just buying this for a defined time period. It's, I want a partner. And I want somebody who also cares about just better serving my members in both the tangible and intangible ways. And I think that's something that's so important for us service providers to the credit union industry to remember, is that is our place as well. And if we're coming at it and saying, I'm just trying to get ROI for myself, then we're not really serving our industry the way our industry is trying to serve their customers, their members. So there's got to be an alignment where we're saying we care about that member experience, that member journey, being able to drive real benefit to them the way you're doing it. I don't know.
Yeah, it's one of those interesting things that I've always been trying to crack the code on it. But I don't know, maybe I'll crack it one day and I'll let you know. But I think it's, like you said, if you as a solution provider is not focused on what the end member is experiencing, then you're going to fail, or you probably should fail, because it's not just about the internal cost of the credit union. Maybe your solution costs less or performs better from one aspect that the credit union internally likes. That's another thing. Is this solution benefiting your internal? Do I like this solution because my employees are going to enjoy it more? Definitely a thing that you need to consider, obviously, but at the stake of the member experience. That's the thing. Like, if you implemented a solution because it helps you big time internally, great. But did it hurt externally with your members? Is it a clunky solution that they hate, but it integrates really nicely into your core, so you like that? So, yeah.
No, it's a good point. I think it's a really interesting defining characteristic of some of the teams that we love to work with the most. Look, the ideal state is amazing member experience, brings new features, brings new benefits, does cool things, s'mores and kumbaya for the member, and also on the internal processes and for the internal staff. And it's not always the case. Sometimes there's give and take. But where I think the credit union industry impresses me the most is typically when we see those types of things put in front of them. Like, here's your options. And the best member experience option actually requires a little bit more work on your side. And 9 times out of 10, they pick that one.
Yeah.
So what? If somebody's got to suffer, it's going to be me. Darn sure not going to be my members.
Yeah. I think it's, like you just said, I think it's bringing that to light and like showing it to me. I was actually just thinking as you were talking, there's this triangle that I've seen before for like any project basically, but I've seen it primarily for like home renovations and home improvements. Do you want it done fast? Do you want it done cheap? Or do you want it done right? Pick two. You can't have all three. So I think, like you said, if you bring that forward and say, hey, here's what we're dealing with. You have member experience. You have ease of use internally. You have low cost versus high cost. What's most important to you? Pick two of them. The answer too is you could probably have all three, but maybe not in the same time frame that you want. Maybe it's like you said, maybe it's extra work, extra time, extra cost, but we can get to that end perfect triangle at some point, but just not right away or not within the current confines of your thinking. You have to expand. Maybe the member, like you said, member experience should be elevated at the top. To get there, maybe it's harder, maybe it's more expensive. We'll get you there.
So I fully expect you to crack the code. You can pre-order Austin's ebook now at Austin. No, just kidding.
I'm writing it tonight. I already got this pitch, so.
With that, Austin, I think we're coming to the end of our time here, man. Let's wrap up with some resources. Where can folks go to get some of the good information that you're using to keep yourself up to date on what's going on in our industry?
Yeah, honestly, I always follow CNBC. And I know that seems odd from like a credit union perspective, but it is incredibly relevant. They have a real estate section in there. They just have like general finance section. So I read that every single night before I go to bed. That's like my thing. And a lot of it you'll find ties back to the credit union space in one way or another. I mean, it's general economy. So that makes a ton of sense. And then LinkedIn is another one that I like to just float around on. I think that's actually how I found the companies that I'm working with today. Was I was looking for like LinkedIn activity. Like, where's a splash happening here? Look for it that way. And then I think just the traditional credit union resources. I think there's not too many that are crazy hidden gems that I'm aware of. So it's CU Broadcast, it's CU Insight, CU Today, all of the CU Journal, whatever it might be. I follow along with all of those too.
And how can people learn more about you, about what you're doing, and about the two companies that you referenced earlier?
Yeah, I'd say LinkedIn is probably the best way. So Austin Wentzlaff, if you search it, you're not going to find a ton of them. I think I'm the only one in the world. So find me on LinkedIn. You can reach out to me. I'm open to conversing with pretty much anybody. So reach out to me. I'm happy to set up some time and talk shop.
Awesome. Thanks, Austin. I really appreciated having you. I think you're somebody that I really respect in this industry, because hopefully our listeners can see just the genuineness behind your passion for this industry. It's something I've had an opportunity to be exposed to behind closed doors, when you had every opportunity to let down the facade, and you just don't, man. You bleed credit unions, and I love it. Thanks so much for joining me today on the Digital Banking Podcast. Thanks, Austin.
Yeah, thanks for having me, and the feeling's mutual.
Thank you for listening to the Digital Banking Podcast powered by Tyfone. Find more episodes on digitalbankingpodcast.com or subscribe on Apple Podcasts or wherever you listen. Tyfone. Everyone builds features. Not everyone builds relationships. We build both.